Hello, everyone. Welcome to our webinar today. I will give it a few more minutes to make sure people will join. And then we will start in around 2 to 3 minutes. But in the meantime, feel free to grab a tea or coffee, get some notebook, and just enjoy. Okay, now I think it's a good time to start. Once again, for those who have just joined, welcome to our webinar. We are here today to talk to you about everything about Dutch taxes, the tax system, what to expect once March 1st begins, once the blue envelopes start coming in. I will not be the one actually talking to you about those things. We have an advisor waiting to join to give you specific information from her experience, her own tips from working with clients for many, many years, but she'll introduce herself. For now, let's just see what we will talk about today. So as I said, basics of tax. I'm not sure if you guys have been here for quite some time already and just want to get some information that maybe you didn't know about, or this is your first time, you don't know what's happening. In any way, we'll cover the basics. I am still learning myself after 8 years living here. We'll talk a little bit about 30% ruling, how that affects your taxes, the tax return, which starts from March 1st, and a little bit about self-employment, and of course, from our advisor, her personal tips and experiences. Let's see. So yes, a little bit about TaxSavers. For those who do not know, we are the trustworthy and experienced of many, many years tax advisory company. We've worked with 20,000 plus clients. Our Google reviews are speaking for ourselves. We work with the whole of the Netherlands international centers. We have partners across different platforms, and our main goal is just to simplify your Dutch taxes. It's quite a confusing topic. Everything's in Dutch for those who do not speak Dutch. It's extra confusing, all the numbers, all the rules, and they change every year. So we're here basically to help you with that. We also apply for 30% ruling, and we cover all kinds of tax returns. If you would like to ask us more questions, if you have a very specific situation, if you just have some questions that you maybe forget to ask during this webinar, you can use one of the contact options here at the slide. We are very open. We are very always available to reply. You can even WhatsApp us and we'll make sure to reply. You can send us DM on social media. We make sure to reply within 24 hours on the working days. So yeah, no question is stupid with us, and we will not charge you for answering basic questions. Once it becomes a service, we'll let you know. We send you a proposal, and if you agree to that, then we start working on it. But we always try to be as transparent and as helpful. That's priority for us. Now, with all the introductions are done, I would like to introduce Kaylee, who is our very trusty tax advisor, who will take over from now on. If you have any questions in the meantime, feel free to ask them in the Q&A. She will be able to answer them at the end. We have a specific special time for that, basically. So Kaylee, take it away.
Perfect. Thanks for the introduction. I wanted to say good to see you all here, but I don't actually see you, so you have to do with my camera at the moment. So as Anna said, my name is Kaylee. I've been with TaxSavers for I would say 3.5 years now. Firstly working on the broader service. Oh, let's start with the next screen, sorry. For individuals, so all the income tax returns, and a bit after that I switched to our entrepreneur department. So right now I'm mainly working with the self-employed people, helping with the VAT, administration, income tax. But that being said, I've had quite some years and quite some experience with the tax returns. I know this is not a fun topic for everyone. I'm not here to convince you of that, but I do think it's important that you know the basics, so you at least understand what's going on if you're filing it yourself or if you get some help filing it. It is important to understand, well, a bit about how everything is structured and how it works. So let's start with the basics. Cover some basic topics that you may have heard of already, or you may hear of soon. So the Belastingdienst, and it already shows the beautiful blue envelope that you will receive during your stay here. They're not always scary, so don't worry about them. But the Belastingdienst, that's the Dutch tax administration or the tax authorities, depending on the translation you use. And just like any other country, they are the ones responsible for collecting tax and enforcing tax laws. But they also manage allowances, toeslagen, and other benefits like healthcare and rent support. So any blue envelope you receive is always from the Belastingdienst. The next one, sorry, allowances, they're called toeslagen in Dutch. There's a variety of allowances from the government or from the Belastingdienst. And that's basically a financial aid to help you cover essential costs such as healthcare, insurance, healthcare insurance, that's one word, rent, daycare, and child expenses. So whether you are entitled to one of those allowances or toeslagen depends on your income, your assets, and your household situation. And some require you to have a tax partner. So if you want to know more about that, it is difficult for us to say right away, hey, you're entitled to this or you're not entitled to this. So if you would like to get some more assistance or more information, just reach out to us and we'll help to see if it's applicable in your case. Fiscal partners or tax partners is, I think, one of the first things that you will see in your tax return or for those allowances. So tax partners, if they meet certain criteria, are able to file a joint tax return. I know this is different in a lot of countries, but the main benefits we have for the Dutch tax return, the income tax return, is to allocate certain income components or assets to get a more optimal tax assessment. We'll get to that in a second as well. I will try to show you some examples, but you need to meet at least one of the criteria. So either you need to be married, and one important thing that's not shown, or at least that shows at the bottom, you need to both be a registered Dutch resident. So if your partner, for example, is living abroad and you're living in the Netherlands or the other way around, then you will not qualify as fiscal partner. So you both need to be Dutch tax residents. If you are, and you are, for example, married, you're registered partners, you have a I always trip over this word, a cohabitation agreement, and you live together in the same house. You have or you recognize the child together. You're registered as partners with your pension funds, or you jointly own a house and you live in it together. And often you have been fiscal partners in the past years. Of course, fiscal partnership has to start somewhere, so that's at least a one minor condition. Um, this is not something you have to apply for. In your tax return, you select whether you are or you're not fiscal partners, and then it will kind of help you along the tax return and make sure that you can optimize your tax situation. And then I think, well, of course, the most important element of our system, our tax system, is the box system. When I explain this, I kind of always assume that you know nothing. So some parts may sound familiar. You may already know some bits, but I will just assume you know nothing and start at zero. The box system. So we have three boxes in our income tax return system. Box one is for income from work and home ownership. Box two is for income from substantial interest in a company. And box three is from income from savings and investments. And we're going to start with box one. This is the most common box for, well, I would say maybe 99% of the people, 99% of the tax residents. Box one is for your income generated by work. So whether that's employment, self-employment, pension, or other former work that you did. And in box one, that I think that's kind of what makes it the most interesting box as well, is that there are a lot of deductions you can benefit from. So, for example, certain health costs, alimony payments, mortgage interest. I will get to that in a second as well. And some of you may have noticed it also says home ownership. So why would home ownership generate an income? That's called the eigen woningforfait, so the owner-occupied home fixed rate. If you own a main residence in the Netherlands in which you live, so really your main residence, and you're registered in the house, it's kind of generating a fictive income. And that's what we call the owner-occupied home fixed rate. So a small percentage of the WAS value will be added on top of your income, but at the same time, you can also deduct other expenses like mortgage interest or financial costs when you purchase the house. But as said, I'll tell you a bit more about the deductions in a second. So what is the income tax at? So we have three brackets in box one. Bracket one is for taxable income up to 38,000 euros. You'll be taxed for 35.82%. We have the second bracket for income between 38,000 and 76,000, for which the percentage is 37.48%. And we have the third bracket for income above 76,000, and the income above that is taxed against 49.50%. So if your income is above 76,000, it does not mean that everything is taxed against 49.50%. It just means that above the threshold is taxed against that percentage. Box two is I would say, a less common box. That's applicable when you own more than 5% of the shares in a company, and not any company. It needs to be a BV, which we know as a limited company, or similar foreign entities. So if you receive dividends from those shares or any other payment related to you holding the shares, it will be accounted for in box two. There are different brackets in each box. So for 2025 in box two, we had two brackets. All the income up to 67,000 euros is taxed against 24.5%, and all the income exceeding the threshold is taxed against 31%. So in this box, you're not taxed against the value of those shares, but only the income you receive from those shares. And differently than that is box three. This is the box you may have heard the most in the news at the moment because there's so much going on. But I will tell you about how it works at the moment. So before they apply any changes. But in box three, you pay tax on income from savings, investments, and other assets, like, for example, a second home, cash, And this box works on a wealth tax system. So they don't look at capital gains, but rather at the wealth on January 1st of the tax year, and they assume an income from the wealth. And on that, you'll be taxed for 36%. Um, Luckily, everyone is entitled to a tax-free amount. So per person, that's 57,000, meaning if your assets, or at least the value of your assets on January 1st is below the tax-free threshold, you will not owe any tax. And we'll see 115,000 for a couple. So if you are tax partners with something, fiscal partners, if we may say it like that, then the threshold actually doubles. Of course, you're also filing a joint tax return, so you're including both of your assets in one system. But sometimes it happens that one partner owes assets below the threshold, the other partner owes assets above the threshold, and combined, um, this sometimes results in a tax-free asset or tax-free box 3 for everyone. Um, that's how it works at the moment. So let's view those. Oh, sorry, I see the percentages are not included there. But as I said, you're taxed on assumed income. So an assumed return rate. We have a different rate for bank and savings. We have a different rate for other assets. So with other assets, everything from shares, cryptocurrency, properties is included. And we have a negative assumed return for debts. Like, for example, a personal loan or any mortgage that's not for your main residence. And based on those percentages, you owe 36%. Um, Sorry, I forgot. I wanted to say a bit more about how it will be in the future, because some of you may have heard news about that. But in a couple of years, they're going to switch to an actual return system, so more similar to a capital gains system, where they will look at your actual return from assets rather than the assumed return. So that will be a fairer system because you'll pay tax on what you actually earn. But for some people, the current system is actually more beneficial because their actual return is higher than the assumed return. So there's a lot to say for that. But as of now, any tax return you'll be filing for the past years will be based on the assumed income, so the fictitious return rates. 30% ruling. Some of you may benefit from this, some of you may have benefited from this, or some of you will benefit from this soon. But I think especially as an expat, you will probably have heard this term a couple of times before. So what is the 30% ruling? It's a tax advantage for highly skilled migrants. It's basically a compensation for the extraterritorial costs you incurred for moving here, for setting up your life here. And that means that up to 30% of your gross salary may be paid out to you tax-free. There is a maximum compensation, so a maximum amount that you may receive tax-free. And in 2026, that's 78,600. Also with this one, there are quite some changes coming up. So um, if you are benefiting from this scheme before January 1st, 2024, so if the starting date was before 2024, you will just benefit for 5 years from the original system. So you will have 30% tax-free, sorry, up to 30% tax-free for 5 years. If it started later, they will cap the benefit to 27%. So for some, that may not be a very big difference, but for the higher income, it will make a difference actually. So as said, what are the benefits? You may receive up to 30% of your income tax-free. That can save you quite a bit of income tax. You may exchange your foreign driver's license for a Dutch driver's license, so it's saving you some costs getting the Dutch driving lessons. And the thing we had, and for some people this may still apply, is the partial non-resident status. So you may ask yourself, partial non-resident, what does that mean? Partial non-resident basically means you only have to declare income from box 1 in your Dutch tax return. So only the income you earn from employment needs to be declared in your tax return. Anything in box 2, so any substantial interest and dividends from abroad, or box 3, any savings or other assets except for Dutch property, will not have to be declared in your Dutch tax return. So it's specifically for the people with a lot of assets, that this was quite a big advantage. And why I say was, they changed this because they did also say like, hey, this is not really fair compared to a lot of other people are not benefiting from this. So they're trying to make it a bit more equal. So again, if you benefited from the 30% ruling with the starting date before 2024, you can still be a partial non-resident for 5 years. If you got the 30% ruling in 2024, the last year you could benefit from the non-resident status was 2024. And if you got the 30% ruling with the starting date in 2025 or later, you will be considered a resident taxpayer, meaning you will have to declare your tax return as any other resident in the Netherlands. So no more exemptions in box 2 and box 3. Of course, you will still hold the benefit of receiving a part of your salary tax-free and the exchange to the Dutch driver's license. So what are the conditions? When can you apply for the 30% ruling? When will it be granted? The most important thing is you must be recruited or transferred from abroad. And abroad being more than 150 kilometers away from the Dutch border. So unfortunately, Belgium doesn't count, and well, quite a big part of Germany is also exempt from this condition. And it needs to be an employer registered with the Dutch tax authorities. And what's really important, if you're in any discussions or agreements with your new employer, they must agree in writing that they're willing to apply for the ruling. So it's not something you can apply for without their consent. They need to approve it because it's officially a benefit for them, for their salary administration. So when you're looking for a new job and you're in any job discussions, make sure you speak about this topic as well, because it's really important that they approve. So what other conditions? There is a minimal salary requirement. Why that is, the government says, hey, even if you have the 30% ruling, a certain amount of your salary should at least be taxable. So in 2026, the minimum taxable salary is 48,000, meaning that if you, for example, your gross salary is, let's say, 50,000 on an annual basis, you may only receive 2,000 euros tax-free because the 48,000 should at least be taxable. Is your salary below that? Unfortunately, you cannot apply for the 30% ruling because you don't meet the salary requirements. If you are younger than 30s and you have a master's degree, Dutch master's degree, or an equivalent, there is a lower threshold of 36,000 instead. Also important to keep in mind with any job negotiations, for example, keep track of these minimum salary requirements. And your expertise must be considered scarce in the Dutch labor markets. So far, I've not seen any 30% ruling applications be denied because someone did not meet this criteria, but they're kind of measuring this by the minimum taxable salary requirements. The next topic is the tax return. So we're actually starting this topic in 5 days on Sunday. If you have been a tax resident last year, you may have received a letter from the Belastingdienst this week, actually, or last week, saying, hey, it's almost time to file your Dutch tax return. And it's not as scary as it seems. And I'm not saying that because this is actually my job, but we're just going to break it down in bits and tell you, hey, what do you actually need? What do you need to keep in mind to make it a bit easier for you? So I think one of the most commonly asked questions is, do I actually need to file my tax return? This really varies on your situation. So the general rule, the first rule is if you receive an invitation to file your tax return, you need to file it before the deadline. Doesn't automatically mean that you owe tax, but if you receive an invitation, always file your tax return. If you don't receive an invitation, it unfortunately does not mean that you will not have to file your tax return, but it just means that the Belastingdienst is not aware of your tax obligation yet. Some may consider that a reason to not file it, but I strongly don't recommend you to not file or not check it at least. Because if you owe at least 57 euros of tax to the tax office, to the Belastingdienst, you still have to file your tax return. If you don't, they check this retroactively, then you will also be subject to fines. So if you're not sure, just check in with us or with, for example, a friend who's already familiar with the system to see, hey, will I actually owe anything? And there are also quite some situations where the Belastingdienst actually owes you money, and they are not very keen on sending invitations to those people. So always check if you earn taxable income in the Netherlands, if you have a substantial amount of assets. In 95% of the cases, you will actually need to file it. So, for example, if you're a student with a part-time job, you have no assets above the taxable threshold, will I need to file a tax return? I can only recommend that you do, because with a part-time job, employers often withhold too much income tax, which means that you'll be entitled to a refund. So with the student with the part-time job, definitely yes. As an unemployed partner, do I need to file your tax return? Well, if there's no taxable income and the partner and the other partner don't have assets above the taxable threshold, then you will probably not owe any tax to the tax office and you will not need to file your tax return. However, you will be considered fiscal partners anyway. So if one partner is employed, in your tax return, they will kind of already ask like, hey, do you have a partner? Do you qualify as fiscal partners? So as an unemployed partner, there's no reason not to include yourself in the tax, or at least in the tax return of the partner who is filing. It will not only take you 1 extra minute, and what it can result in is less tax for your partner to pay. So I'm not saying you have to do it, but in some cases it can actually save your partner some tax. So that's, I think, a reason to actually file it. What if you're employed, renting a house and investment in stocks? So if you're employed, your sorry, your employer is already withholding income tax for you. That's something you can see on your payslip, something you can see on your annual income statement, but they are withholding it and paying it to the Belastingdienst on your behalf. Doesn't always mean that they withhold the right amount. If your contract changes throughout the year, if you're going to work more or less, or if your salary increased, it could be that they end up withholding too much or too little income tax. So if you're employed and you have investments in stocks, I definitely recommend you to file, and in some cases, it's actually obligated to do so. It also says renting a house. If you rent a house, that's something that's not taken into consideration in the Dutch tax return, so that's not something you have to include. Yeah, if you're employed and you have stocks, then there's a big chance that you may owe something or you're entitled to a refund. So definitely. Um, the same actually goes for a pensioner. So if you receive a pension from the Netherlands, they will also pre-hold some income tax for you. And sometimes that's too much. Often it's too little, actually. So definitely check that you've paid enough. Um, and the same goes for the assets abroad. If you are a Dutch tax resident, there's no distinction between assets abroad and assets in the Netherlands. So again, if the total wealth on January 1st is above the taxable threshold, yeah, you definitely have to file the tax return. And then the tax returns itself, because we actually have multiple forms created for different situations. Mm. The first one is an M form. Um, the M form is the first form any expat or any international coming to the Netherlands will have to file. It's a migration form required for the years that you move to or out of the Netherlands. Why this is different than the regular tax return is actually because any income you earn before coming to the Netherlands or after leaving the Netherlands is not subject to Dutch taxation. So it's not the case if you lived here for 7 months that you are a tax resident for the entire year. That actually starts when you register and stops when you deregister. With the people who have to file an M form for last year, Definitely do. Because if you've been employed in 2025 for part of the year, and then there's a very big chance that your employer actually withheld too much income tax. So I think about 80% of the cases we see with M forms where people worked in employment for part of the year, they actually get money back. So if you need to file an M form for last year, definitely do. Um, then the M form, that's the first thing you need to do. And then the year after, if you lived in the Netherlands for the entire year, you need to file a P form for particulier, so an individual. If any Dutch tax resident talks to you about the tax return, it's always a P form, so that's the regular tax return. We have the C form. So what happens, for example, if you leave the Netherlands, but you still earn income from the Netherlands or you still own Dutch property, you will be a non-resident with Dutch tax obligation. And for those scenarios, you need to file, you need to file the C form. So as it says, for non-residents who lived abroad for the entire year, but still receive Dutch income. Um, and unfortunately, this is also an important form, is the F form. That's the final tax return for when a tax resident deceases in the tax year. So that's also important to know. Next one. So what do you need to do to prepare for a tax return? Um, if you are a tax resident for the entire year, the Belastingdienst will already know a lot from your employment income, from any Dutch assets you hold. But the first year with an M form, the tax return is quite elaborate because they know nothing of you yet. No foreign assets. They don't know your official, or at least they know your official registration date, but it's not included automatically. So when you're preparing for the first one, what do I need to have? So you need to have your BSN number. I think that's quite easy to retrieve. The exact immigration or deregistration or registration date. That's on the form you get from the municipality. Before you even start, you need to make sure you have a DigiD. That's kind of the verification system we use to log in on any website from the government, from the Belastingdienst, or for the allowances. If you work in employment, you need to have your annual income statement that's provided by your employer, and in Dutch we call it jaaropgave. They always provide it to you in January or February. What else do you need? So if you have any assets, you need to know the value on January 1st. All Dutch banks and brokers will provide you with an annual statement as well. I know that a lot of foreign brokers or banks may not provide an annual statement to you, but then you need to retrieve the monthly statement that shows this value. If you own a house here in the Netherlands, you need to have information on the property as well. So you need to have the WAS value. That's something you can also look up online. You need to have the annual mortgage statement, which also will be provided to you. And if you purchase the house, you also need to have the notary bill on hand because quite a lot of expenses you inquired for purchasing the house or mainly for getting the mortgage are deductible. So definitely get that ready. And if there are any other deductible expenses, for example, like healthcare costs that are not covered, make sure you also have the details ready. If you have any loans or debts, again, just like with the bank, if it's a Dutch bank, you will get annual statements. If foreign, make sure you have a statement that shows this. Um, and if you're not sure, as it says, contact your tax advisor beforehand to make sure that you have all the documents ready. So whether you're getting our help or someone else's or you're doing it yourself, we will also need this information from you. So if you're not sure, just check in with someone and to make sure that you can actually file before the deadline and avoid any fines. Um, so tips on filing. As you saw on one of the first pages, we filed a lot of tax returns, so there are quite some important recommendations so we can give you to avoid the most common mistakes. The first one may seem like a very common recommendation or tip, but file before the deadline. Um, at the moment, or at least this year, the deadline looks a bit different. So for any regular tax return, and with regular tax return, I mean a P form or a C form, the deadline is May 1st. So you can file between March 1st and May 1st. You can request an extension. If you get the extension from the Belastingdienst, you will not get a fine for filing late, but if you owe them tax, you will have to pay tax interest. This year, there was an error with getting the M forms ready, so the migration forms. So if you need to file an M form for 2025, this year, as an exemption, you will actually have to file between May 1st and July 1st. So you have a bit more time to get the M form filed this year. The second mistake, and that also may seem like a very a simple recommendation, is choosing the incorrect tax return. So sometimes people actually file a P form when they moved to the Netherlands in a certain year, or they file an M form while they've lived in the Netherlands for the entire year. So when you're starting out, just make sure to check, hey, did I register in the Netherlands for the entire year, for part of the year, or have I not lived in the Netherlands at all? And then choose the correct form. If you receive an invitation from the Belastingdienst, it will also show like, hey, this is the form we expect you to file. So just cross-check this to make sure that it's correct. Um, the third one is not filing because your income seems, or at least feels too small. So for example, an internship, a part-time job, or side jobs. Nothing is too small, and having a small income may actually result in additional tax benefits. So definitely check. Um, so not declaring foreign income. Um, this is something I will not bore you with right now, but there are double taxation agreements between every country, or most countries, sorry. So if you are a Dutch tax resident and you receive income from abroad, you always have to include it in your Dutch tax return. It does not automatically mean that you owe tax on it, but you always have to declare it. And based on the treaty, it will be determined if you owe anything here. Does it turn out that you actually owe anything here, then the other country should actually refund you the income tax withheld. So declaring something from abroad, so foreign income, foreign assets, like foreign shares, foreign property, foreign bank accounts, should always be declared in your Dutch tax return. Another mistake is filing income tax for yourself only if you are in a fiscal partnership. If you are fiscal partners, you will still be fiscal partners if you don't file a joint tax return. So the benefit of filing it jointly is that you only have to declare everything once. It's less likely you make mistakes, and it's easier to allocate everything. So if you have a fiscal partner, our only recommendation you will hear is file a joint tax return. It will save you time and it will save you mistakes. So another one, this will already be pre-filled for you if you own Dutch properties, but using the wrong WOZ value, the WOZ value. The reason for that is in your 2025 tax return, for example, you have to use the value from 2024. There's like a 1 year delay because the reference date for 2025 is actually the one for 2024. So always remember if you're filing a tax return for a certain fiscal year, use the WOZ value of the year before. Another one that's actually in your benefits is forgetting to include foreign dividend withholding tax. So if you hold shares, for example, let's say the US, you receive dividends from the shares and the broker in the US withholds dividend tax on those dividend payments, then that will be considered double taxation. So if any statement shows withholding tax from abroad, you can actually deduct it in your tax return here and avoid paying tax on it twice. So even though we have a different system at the moment, withholding tax on dividends or interest may be deducted in your tax return. And of course, not making benefit of any other deductions is also something that we see. So as said, the mortgage interest, the financing costs, but also if you had to pay a lot of healthcare expenses or if you're prescribed anything and they were not covered by your healthcare insurance, it can be something that's actually beneficial in your Dutch tax return. So if you have a lot of uncovered healthcare expenses, make sure to include it. And another important deduction is annuity payments. So if you open a private pension fund or at least a pension account, a pension savings or investment account in the third pillar, any payments you put into the account to the fund are also a deduction for your Dutch tax return. So if you decide to open one in the Netherlands, you will see that any premiums you pay are actually a deduction. kind of already spoiled the next page, sorry. But what are the deductible expenses? We have the healthcare and medical expenses, as I explained. The second one is home ownership and mortgage interest. Third one, the annuities and pension savings. We have commuting costs. So if you have to incur a lot of additional costs to travel to and from work, and your employer only covers a part, depending on how many kilometers you live away from work, it can create an additional deduction. We have spousal alimony. So if you have to pay spousal alimony, so not child alimony, but spousal alimony, that's actually a deduction in your tax return. If you're the one receiving the spousal alimony, it's considered a taxable income, so you will still owe income tax on that. But if you're the one paying, then it is an additional deduction. And we have the charitable donation. So if you donate money to a charity in the Netherlands and some international charities, then it's also a deduction. There are more rules on that. That I'd be happy to explain to you more about, for example, privately. But do check if you donate to a charity in the Netherlands. Your donations may be deductible. Um, and then the last part, I don't know, of course, how many of you are self-employed or considering starting as a self-employed, but it's actually, well, my preferred topic. So if you are a ZZP'er, an eenmanszaak, or a freelancer, depending on the term you use, what do you have to think of? How do you need to start? So if you are planning to open a business here, a sole proprietorship, the first step is always the Chamber of Commerce. All businesses in the Netherlands are registered there, and that's the first step to actually open a business. What else do you need to account for? You have to know the VAT. You have to administrate the VAT because as a person, you are also paying VAT in the Netherlands, but you cannot actually do anything with that. As a self-employed, you're charging VAT to your clients and you're paying VAT to your suppliers, and they need to be dealt with in a quarterly VAT return. So Chamber of Commerce, administration, VAT. Then you will also need to file your annual income tax return. So just like an employee, you will need to file the same annual tax return. There's no additional annual tax return. Um, in your tax return, there are additional benefits though. So there are additional deductions you may be entitled to as an entrepreneur compared to an employee. So for example, we have the small business profit exemption, the SME exemption, we have the starters deduction, the self-employed deduction, and a couple of investment deductions. So my only recommendation, because starting as a ZZP or a freelancer is a very broad topic. So my only recommendation really before you start out, seek some help. Again, whether it's us, whether it's an article from the Chamber of Commerce, do really check what your obligations are well, after you start out. And if you would like to get some help, we have a very wonderful entrepreneur package, and I'd be really happy to assist you with all entrepreneur obligations from here on. And then I think it's time for some questions. I see that some have been asked in the Q&A. If we don't answer a question here, it could be that it's too specific. So I'll just check what the questions are. Um, Here, so do you need to submit your box 3 in the tax return if it's under the taxable threshold on January 1st? I wouldn't say yes and no. So what happens if you file your own tax return? They will ask you like, hey, does the value of your assets exceed this amount? And the amount you will see in the tax return is actually lower than it's shown here. But that has to do with the allowances. So it's about 38,000 in the tax return, I believe. So if it's below that amount, you don't need to declare anything at all. If it's between the amount they mention in the tax return and the 57K, then yes, you need to declare it. You will not owe anything, but you will need to declare it. And if it's above the threshold, yeah, you will definitely have to declare it. Yeah. Sure. In the back to the chat. Someone says, if I have a mortgage abroad, do I need to declare the full market value of the property or the equity? You will need to declare in two separate sections. In the first one, you will need to declare the full market value of the property. And in the other section, so in the debt part, you will need to declare the outstanding mortgage value. So not the equity. Eventually, it will turn into the equity, of course, but you will need to declare both values separately in a different section. Yeah. Hope that answered the question. Um, Someone says, if my 30% ruling started on May 15, 2024, do I need to declare my foreign bank accounts and other assets in the 2025 tax return? Yes. Unfortunately, you will have to declare everything in the 2025 tax return because the exemption was only valid for 2024. So if it started in 2024, yeah, then 2025 is the first year you have to declare everything from Dutch bank account to foreign assets. Yeah, correct. I think, at least I don't see a lot of questions popping in, so that either that's a good sign, or you're still thinking of your questions. I think I will drop it back to Anna right now for the final part. At least from my side, thanks everyone for joining us here. Do find me or my colleagues if you have any questions, because we're more than happy to help you out.
Indeed. Thank you so much, Kaylee. If you guys have any more questions, you can still drop them in the chat in the Q&A even after the meeting ends, because then I will be able to collect them and then send you a follow-up answer. And as always, you can always just reach out to us through, let me get back to the slide, through one of these options. It will be great if you also let us know if you're coming from this webinar, so we know what kind of question, what kind of advisor maybe we can reconnect you, if we can reconnect you back to Kaylee. That's always possible. And yeah, in the meantime, I would like to, oh, we have something. Yes, we have two more questions, Kaylee. Do you think we still have time to answer them?
Definitely, definitely.
Okay.
So there are two more questions. So Amy asked, if you're still under the partial non-resident status, do you need to declare foreign income? Yes. So foreign income is not something that is exempt under the partial non-resident status. Only anything, or at least foreign assets and Dutch assets, but foreign income is not exempt in any case. No, correct. And how do we assess the value of the property in a foreign country? Other EU countries, or at least a lot of other countries, do not have an official valuation scoring. So the guideline that the Belastingdienst provides is you need to make an estimation. And I know that sounds fake, but you can estimate the value based on recent properties that have been sold in the same neighborhood. Some countries do work with, for example, price per square kilometer or other entity. Or, for example, you have done a recent valuation or you acquired the property not too long ago. It doesn't need to be on the euro specific. The reason for that is that property abroad is not subject to Dutch taxation. So you will need to declare it in your Dutch tax return, but you will also be granted an exemption for the same value. So the only thing you need to make sure is that you're not declaring the value to be 1,000 euros while it's actually 500,000 euros. But it needs to be a valuation based on one of the things I just mentioned. Yeah, correct. I see other questions popping as well. If you're above the 150K threshold, is box 3 needed if the 30% ruling expires during the 2025 tax year? Yeah, that's a good question. If your 30% ruling expires throughout the year, then yes, you will need to declare your assets for 2025. If, for example, your 30% ruling expires exactly halfway throughout the year, you will only be subject to taxation for one half of the year. There are two ways to go about it. either you declare everything, and if the assessment comes in, you have to file an objection stating, hey, I was actually exempt for part of the year. Or secondly, there's also a method to actually declare everything pro rates, but that's a kind of messy system. So my only recommendation, declare everything as if you were subject to tax for the entire year, and then object to the assessment. And the objection would just be an online form you need to fill out, and then they will kind of recalculate it. What if we have a scholarship from another country? Do I have to declare it? Yes, but I cannot tell you right away if it's subject to Dutch taxation, because this is a really specific article in every tax treaty. So, yes, you will have to declare it, because in most cases it is considered compensation for the work that you're doing. In other cases, it's actually compensation for living expenses. So it really depends on the type of scholarship and the country you're receiving it from. So, I cannot tell you, unfortunately, right away if it's something you have to declare in the tax return. No, sorry. We're more than happy to help you out, by the way. So if you fill out the contact form or reach out to us on phone or social media, we're happy to help you figure this out. Yeah, I think that was all, Anna.
Yeah. Yes, I think that was all. I think it's good to round up and get to continue enjoying our evening, done with all the fiscal numbers and documentations. Thank you, everyone. This meeting has been recorded, so you should be able to access it if you signed up through the Microsoft for a certain time. So make sure to check it out again if you forget something. And yeah, good luck with the upcoming tax season. It's for sure it's going to be a busy one for us. Bye bye.